For the avoidance of doubt, the Simple Side does not provide investment, tax, or legal advice. As with any asset, the value of any asset class can go up or down, and there can be substantial risk that you lose your money buying, selling, holding, or investing in any asset. You should carefully consider whether trading or holding assets is suitable for you in light of your financial condition. Welcome back to the Simple Side. In investing, what is comfortable is rarely profitable. That's a quote from Robert Arnott, I'm not really sure. But anyway, he is the founder of PIMCO. And if you're not aware, this is the same company that offers ZROZ, ticker ZROZ. This is the zero coupon bond ETF that I bought not too long ago that made me 60 something percent from October 2023 to September 2024. So thank you, Robert. And I've quoted you today as my thanks. Anyway, happy Saturday to all 300,000 of you simple investors. Really, I think it's about 291, 293, something like that, but 300,000, I round. I want you to real quick hear, listen to me, or see below if you're looking at the newsletter, thesimpleside.substack.com. Go find me for a couple of quick updates before we get into this week's returns, which, by the way, did outperform the S&P 500 again. All right, if you like quick, short-form stock updates and analysis daily, go check out the daily newsletter that I started. I have it priced extremely cheap for those of you that don't want to pay the $200 annual fee that the Simple Side has. You can go and buy this daily newsletter. I think it's something like $1 a month or $10 a year. The platform that I use actually limits the cost to $5 a month, but I was able to discount it down to $1 a month for everybody. So this is literally the cheapest possible newsletter that you can get off the platform that I use. I also want to update paying subscribers and let you guys know that in December, we're doing a $2,000 giveaway. This is basically a 100% write-off for me on my taxes. And so my basic idea is that any extra profit, quote unquote, extra profit, anything that I'm going to be taxed on, I'm just going to give back to the community. So if you're a paying subscriber, if you've been supporting me, I'm going to give back to you. You're going to 10x your investment if you're one of those paying subscribers paying $200 a year. So look forward to that coming in December. At some point here in November, I'll make a longer post about when we're going to do the giveaway and all that good stuff. So I look forward to seeing you all then. All right. Next week, I think around Wednesday, paying subscribers will also be receiving an email on new contrarian bets that I have. For those of you that don't know, our past contrarian bets are averaging a 70% return. I mentioned one earlier, this is the zero coupon bond trade that I made. That was a 60% return. I also have Weight Watchers that ended up being around 100 to 175% return, depending on when you sold. And then I also have a couple of other things, Sweet Green at 100%, and some other things in that space. So anyway, we have that. I also want to let everybody know that I am reorganizing the homepage of my website, which again, thesimpleside.substack.com. And so hopefully sometime this weekend that will be fixed and will be looking a bit prettier. Also, I've been getting tons of emails from you guys, tons of people filling out the survey. And so what I'm looking at doing is going through at some point in the future and doing a full-length podcast, maybe a video podcast, and just discussing all the answers to all the questions that have been submitted to me. So I'm going to look at doing that sometime in the future. I'm not sure when that's going to come out, but it is on the way. Again, if you're a paid subscriber, you're going to get access to all of this. So make sure that you are jumping on the train. Now, the price of my subscription goes up while my performance goes up. So the better stock trades that we have, the better we perform, the more expensive the newsletter becomes. We originally started at $5 a month, and we have since moved into, I think around $20 a month, and then $200 a year. So you can see the performance has been quite well. If you want to reach out to me, send me an email at thesimplesidenews@gmail.com or reply to the email newsletter. You can also click this button that's in my newsletter and that will send me a little survey. It's anonymous. Feel free to just let me know anything there. All right, let's talk about past performance. So over this past week, we outperformed the S&P 500. Yes, we're back. If you're on the newsletter, you'll see a little image here, the graph that shows what a $10,000 investment would have grown to if you would have started following this newsletter back originally when I started. And then I'll tell you some returns for those of you that are just listening and not reading the newsletter. So over a 16-week period, the SPY that we've tracked weekly has returned 7.34%. Over that same period of time, the simple side, my newsletter, has returned 21.57%. And every single one of the newsletters that was sent out over the course of all of those weeks has been tracked. And you can see literally every single newsletter on my website, thesimpleside.substack.com. Annualized, the SPY should be returning, based off of the past 16 weeks, should be returning 23.85%, which is an impressive return. However, my 21.57% that I've averaged over the past 16 weeks should net an annualized return of 70.1%. 70.1%. That is an outperformance of over 46%. I mean, come on. That's incredible. Over the course of a 16-week period, I'm outperforming by around 14%. So I'm absolutely crushing. Again, I have a link actually that goes back to all of my previous newsletters in the newsletter that I'm going to send out today, and you can find that link and click there, and you can see every single week the stocks that I picked for that week, how well they performed, and you can check all that out there. I also have a little image here in the newsletter that shows you kind of like all of the little intricate details about how I performed this week, how I've performed over the past 16 weeks, and you can check that out. This past week, I thought that we were going to do well with KKR, Sure, which is an ETF I track every week, Cruise, an ETF I track every week, Nance, an ETF I track every week, and then Google and Meta. And between all of those picks, we averaged a 5.33% return on the week. The S&P 500 averaged a 4.87% return. So, like I said, we beat it this week. All right, now let's talk about the things that we're going to be reporting on today. That includes politician trading, insider trading, executive trading, and then for all the paying subscribers, you can read about mergers and acquisitions, top investment ideas, our contrarian bets, the flagship portfolio updates. And the flagship portfolio is currently free for all subscribers, but that is going to go behind the paywall for this upcoming year, as the performance for that portfolio has been unreasonably good this past year. And so it needs to go behind the paywall. It's worth it. And then we're also going to get into expected stock movements from options trading. And so I kind of give sentiment analysis here and stuff like that. So go and check that out. All right, politician trading. I've been blabbing for long enough, so I'm not going to talk about the ETFs, but just know Nance year to date is up 30.94% and Cruise is up 20.06% year to date. So average of about 25-26% year to date between those two politician trading ETFs. I'll talk about our politician stock highlight here. I went ahead and combed through all of the recent trades, and sadly, we've had kind of an uneventful past couple of weeks or months even in the politician trading world. However, there was an interesting sell of Tesla. A Democrat sold over $100,000 worth of Tesla. But there's no way to tell whether he sold that because of the current president-elect, or if he sold just because he thought the company was, going to end up performing poorly. Tesla had a huge bounce on Trump's election. Of course, Elon and Trump are tight. So we saw a massive bounce in the stock there. And whether that's here to stay or not, to be determined. But politician trading says Tesla is going down. Now, I am paying attention to a particular stock here that politicians have been trading, actually buying up over the past couple of months, and that's GLW. This company makes the screens, or like the glass for screens and TVs, phones, all that kind of stuff. And they've had some recent price jumps, but these price jumps now mean the stock is significantly overvalued. I still think my kind of metrics put the stock at an 8.0 out of 10, and that's based on growth, profitability, financial strength, value, and momentum. But let me tell you about the issues that I see and why I have this stock actually as a sell opportunity currently. They keep issuing debt. Rates are really not that favorable right now, and issuing more debt is quite a burden on a company, and they keep issuing debt. We've also seen their gross margin decline. We've seen their operating margin decline. We've seen insiders selling. We've seen their price to book and price to equity ratios at 3-year highs. So again, the stock is, I guess you could say, valued highly, but priced highly. We've also seen revenue per share decline. The price is at a near 10-year high. And honestly, I give the company a moderate risk assessment. And so really between those 8 factors, I'm kind of just not in the market for buying this. If the stock happens to take a bit of a drop, I'll buy in more. I do have it in my portfolio, so I'm glad that it's as high as it is right now, but I don't think this is here to stay. Again, if you're reading the newsletter, you can go look at the 5 most recent politician trades that happened. A lot of these coming from Miss Taylor Greene, as I refer to her, the Republican in Georgia. She trades quite a bit. And so you can go check out, I think, 4 of her trades and then another Republican from Georgia's trades on there. All right, let's talk insider trading. I track the ETF SURE. That's up 18% year to date. And last week I talked about Buffett, who was buying SiriusXM. And I basically said the stock is on track for poor performance. And guess what? On a week where the S&P was up 4% or more than 4%, SiriusXM was down 3%. Boom. I mean, I called that one, but that one was pretty easy to see. I was looking at the stock. It looked really overvalued. There's not a lot of market share for them to gain. But this week we've got new buyers in the market. And the most interesting buyer was APMH Invest, who bought $46 million worth of Noble Corporation, ticker NE. The company is relatively new. It IPO'd in 2021 and it operates kind of like a contract company for drilling rigs within the oil and gas industry. Now my model puts the stock ranking at a 2.6 out of 10, and that's terribly poor, but I think the reason that it's doing that is just because I don't have enough historical data to give it a fair valuation. My model ranks things based off of historical data, industry comparisons, and then just general how well things are performing. And I think there just isn't enough data for that to value it properly. So don't pay attention to that 2.6 out of 10. They did, however, experience a 10% jump in price just this past week. And I'm sure that over the Republican presidency that we're going to have over the next 4 years, we're going to see larger gains like that happening, especially as Trump probably tries to bump up and bring down the gas prices. That was his big thing back in, his 2020 time. And so I think we're going to see this again where gas prices are going to come way, way, way down. I do think that this is going to be a great long-term buy, and I might put it in my personal portfolio, but I don't think it's a great buy for this weekly newsletter. The stock is still new and it's speculative. Price targets for the stock put it at $49, which correlates to a 1-year return of 40%. And so that's why I'm interested in it in my personal portfolio. But I just don't think that, a stock that bumped up 10% last week is going to have the same experience this week. And so I'm going to put it on the watch list for this week. Again, if you're reading the newsletter, thesimpleside.substack.com, you can check out 4 of the other largest insider trades from this past week. Another one of these buys, by the way, was something that I'm looking at buying. JELD is the ticker. Go and check out the newsletter and see if you're interested in that company. Now we're going to get into executive trading. I'll be quick here. We saw total ownership in our top 5 reported companies grow 34% this week. The biggest came from 2 buyers buying B&G Foods, ticker BGS. One of them increased their ownership by over 25%. BGS, by the way, is down 45% year to date, and I have a bunch of reasons in here why I don't like the stock for right now, and a little bit of good news too, but go and check that out. The stock is currently on my watch list. All right, paying subscribers, you know what's happening here. We've got investing for next week. So this is where I release all of the upcoming buys, all the stocks that I'm going to be buying for the upcoming week. Paying subscribers get to look at all of this, and so far, like I said, so far this year, since July, we've returned over 20%. And so these people that have been following me, these people that have been on this trend have been performing incredibly well. If they had $1,000 invested buying these stocks, they would have paid for their annual subscription. So performing really well there. I'm happy about this. I've got some great buys this week. I think there's around 6 buys. 6 buys, some updates on the contrarian bets that are coming out next week if you want to try to find your own stocks and get in a little bit earlier there. I'm thinking about doing a flagship portfolio update in this section of the newsletter as well. So let me know, send me an email, or if no one says anything bad about it, I'm going to keep it in there. I'm just going to kind of update how the flagship portfolio has been performing. Stocks that kind of fit in the flagship portfolio that I haven't bought into yet, things like that. I do want to say that since the flagship portfolio was released to subscribers, which I think was sometime last week, it's outperformed the market by 1.86%. And I jokingly said this is better than most hedge fund managers. I say that because, on average, hedge fund managers don't beat the market. I also want everybody to know that I revamped the implied options price movement section of this newsletter. That's at the very bottom. A lot of people have been interested in that. I've now added a sentiment analysis for the day of the week. I've added what I expect the price movement to be for each day of the week for a specific stock. And then I've kind of added a general analysis of how I expect things to perform based on current news data. So you never know really if the news is right, if they're wrong. So it could be off, but we're going to see how it performs. Again, go ahead and check that out. It's new, it's awesome, and I think you guys will enjoy it. And as always, that is it for me. I appreciate you all spending time with me again this week, and I look forward to seeing you next Saturday with another S&P 500 Outperformance.